Welcome back to Alpha Recap. Big weekend headlines to unpack, and the market was closed for the weekend, so we're looking at what happened last week and what could set the tone when trading restarts Monday. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to cover. Fintech, AI talent moves, a geopolitical shipping deal, and some wild microcap action. Buckle up.
Let's start with the fintech and market structure story that dominated the weekend chatter. Charles Schwab reportedly prepping an S&P 500 linked prediction market. Big headline. What did you take from that?
So, what really stands out here is the potential change to how retail traders play event and short-term outcomes. Analysts framed it as a new revenue channel. Trading fees and active retail flows could shift into these contracts.
Right, and coverage suggested the valuation impact could range from marginal near-term to double-digit upside in a bullish adoption scenario. That's a wide range, which tells you a lot about the uncertainty.
Exactly. Adoption rates, regulatory friction, and take rates are huge unknowns. If it caught on, it could concentrate bets around binary event outcomes and amplify short-term liquidity on specific days.
Regulators were flagged as watching closely. That's the other axis here, innovation versus compliance risk.
Right. The SEC will be interested in how these instruments operate, investor protections, and whether they change market microstructure in ways that create systemic risks.
And that ties directly to the microcap volatility we saw. A product that lowers the barrier to bet on events can cascade into concentrated moves in small names.
Yeah, absolutely. Event-driven contracts tend to funnel attention and capital into thinly traded issues, which is a recipe for big percentage swings.
Let's talk about those swings. Weekend feeds showed some extreme microcap moves. The numbers were wild. For example, one tiny name was up about 127% on roughly 5 billion shares. Another surged about 615% on about 388,000 shares. And a third climbed about 145% on roughly 1.4 million shares.
Not a great day for anyone expecting orderly market behavior. Those kinds of prints point to very thin liquidity, weekend noise, and possibly pump activity or data anomalies in feeds.
And there were also big declines. Some names dropped nearly 2/3, and one fell about 47% on tens of millions of shares. So it wasn't all one way.
Exactly. When one microcap runs up 300% and a peer crashes 60%, portfolio managers with concentrated exposure face real execution and rebalancing headaches.
Quick reaction, small segment. Short one here.
Right.
So how does the Schwab story connect to this pattern?
When retail has easier ways to place concentrated binary bets, the natural outcome is more dispersion. These prediction contracts typically concentrate liquidity around news windows, which squeezes spreads in some names and leaves others dangerously thin.
And there was a cautionary note in the weekend coverage. Verify filings and exchange notices before treating every move as fundamental. Good reminder.
Totally. Many microcap prints are driven by thin feeds, aftermarket activity, or even reporting glitches. Primary sources matter.
Switching gears, AI. A headline that grabbed attention was John Jumper leaving Google DeepMind to join Anthropic. That was framed as a material talent capture. What's the significance?
When you step back and look at this, getting a high-profile researcher out of DeepMind can accelerate timelines for product milestones at Anthropic. It also feeds private market comparables and fundraising narratives.
Analysts noted this intensifies competition among AI labs. It's another example of structural talent flows that could affect re-rating in parts of tech.
And at the same time, there's legal friction. Xiaoyi filed an appeal related to patent rulings involving Apple. So the sector is seeing a mix of upside from talent and downside from regulatory or legal tail risks.
That's an important tension. Concentrated optimism around AI hires and semiconductors, and simultaneous rotations into defensives like big health or consumer names.
Yeah, that tracks. It creates a bifurcated market where pockets of growth enthusiasm coexist with flight to dividends and safety.
Speaking of semiconductors, Marvell Technology had a notable move. It finished the day up about 7.3% on elevated volume. What does that tell us about chip demand?
That kind of move suggests pockets of renewed enthusiasm tied to AI compute demand. Chips remain sensitive to analyst revisions. Positive notes can quickly lift names, especially those with exposure to data center and AI workloads.
Let's give listeners an energy and geopolitics update. There was a deal between the U.S. and Iran to open a toll-free sea lane through the Strait of Hormuz, which boosted tanker traffic. Why did that matter for markets?
More tankers moving through Hormuz generally reduced shipping risk premia and pushed down pressure on oil price volatility, at least near term. If charter rates ease, that can hit tanker operators' short-term earnings assumptions and influence integrated oil majors' volatility exposure.
Analysts said vessel counts and time charter rate data would be the thing to watch to see if the easing stuck beyond the toll-free window.
Correct. Governance after that window ends is the open question. If the arrangement lapses, risk premia could move back up quickly.
Another market note, there was commentary about a rotation of smart money into defensive names, specifically a big shift toward a large health and consumer conglomerate that pays dividends. That was contrasted with the AI and semiconductor interest.
Analysts flagged it as a sign that institutional managers were trimming risk in growth names and reallocating into steady dividend payers. That can tighten liquidity for growth in the short run while keeping the re-rating story for AI alive in specific pockets.
Now, leveraged products. Weekend trading saw a large semiconductor inverse leveraged product decline about 20% with heavy turnover, and a small cap inverse leveraged product fell about 6% on extremely high activity. What should traders and risk managers have been thinking?
Large percentage moves in leveraged and inverse products can cascade into rebalancing flows, margin events, and correlated liquidations. Traders needed to watch implied volatility and rebalancing schedules closely to manage knock-on risks.
Short reaction segment.
Yeah, that was a volatile setup.
We also had a Canada housing correction story. A federal housing announcement in Montreal was clarified after a correction from the National Housing Agency. That's a reminder that policy headlines can show up quickly in bank and mortgage names.
Banks with mortgage exposure were watching that closely. Even a small policy tweak can nudge mortgage insurance assumptions and bank portfolio risk.
And a quick labor note from the weekend. A report showed college students with work experience were about twice as likely to be employed after graduation, which is a slow, structural signal for staffing and education technology demand.
Noted. Market segments tied to hiring and ed tech could see structural demand if that pattern persists.
Okay, let's boil this down. What were the big cross-market trends you saw coming out of the weekend?
Two dominant trends. 1. Retail market evolution. Products like a prediction market could amplify event-driven volatility and increase dispersion. 2. AI remains bifurcated. Talent wins and semiconductor strength coexist with legal and regulatory tail risks, and institutional rotation into defensives.
And geopolitics in Hormuz provided a counterweight by easing energy risk premia, at least temporarily.
Yeah, that was an important offset. It lowered one piece of macro risk while other pockets got noisier.
Before we wrap, let's give listeners a checklist for Monday, June 22nd, when markets reopened. What should they watch first thing?
First, any official Schwab announcement or regulatory filings related to the prediction product. Filings and day one liquidity will tell you whether it's novelty or something bigger. Second, follow through volume in the biggest microcap movers and any company or exchange notices to verify the moves.
Third, statements or filings from Anthropic or Google DeepMind and updates on the patent appeal involving Xiaoyi and Apple. Fourth, vessel counts and charter rate movements for tankers, and any post-toll-free governance language on Hormuz.
Fifth, semiconductor analysts' notes and commentary around Marvell and peer demand signals tied to AI compute. Sixth, the clarified Canadian housing announcement in Montreal, and any bank commentary on mortgage insurance exposure. Finally, monitor leveraged product flows and implied volatility for signs of systemic repricing.
Good list. Quick reactions before we close.
Honestly, I was a bit surprised by the sheer scale of the microcap prints.
Yeah, that was eye-opening.
And the combination of a potential Schwab product plus those microcap swings could be a very noisy period if both trends play out.
Okay, final takeaways for listeners.
1. Markets were showing more dispersion. Institutions were rotating defensively while retail flows and event bets pushed microcaps. 2. A reported Schwab prediction market could structurally increase event-driven volatility if it gained traction. 3. AI momentum and talent flows are real, but legal and regulatory risks remain important. 4. The Hormuz deal eased a near-term energy risk premium, but governance after the toll-free window mattered.
And remember, this was market analysis and not personalized investment advice. Analysts note data anomalies in microcap feeds, verify filings and primary sources before acting.
Exactly. We're presenting information and context, not recommending any buy or sell actions.
All right, that's our weekend wrap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. See you next time on Alpha Recap. And again, hit stockalpha.ai with your questions, and we'll get to them live.